All right, so are you ready to dive deep? Today we're tackling something pretty fascinating, I think. We're going to be looking at how the U.S. election could shake things up.
Yeah, shake things up for the oil market, maybe even the US dollar.
Right. It's November 5th, and the race between Trump and Harris. It's tight, neck and neck.
Super close.
We're going to be digging into some expert analysis, looking specifically at, let me see, pages 1 through 7 of this report called Energy Market Drivers.
It's a good one. It really breaks down, how the election could impact everything.
Oh, absolutely. And one thing that jumped out at me right away, it said that U.S. oil production has actually increased under Biden, Obama, and Trump, all at pretty similar rates.
Yeah.
And I would have thought, drill, baby, drill. A president like that would have a much bigger impact, right? So what's going on there? What's the real story?
Well, it's easy to think that the president has like this direct control over how much oil we produce, but
Hmm.
the reality is it's a lot more complicated than that. I mean, you got global oil prices, interest rates, and then of course there's all the technological advancements, even things like AI now, and then, access to capital. These are the factors that really influence production. Doesn't matter who's sitting in the Oval Office, really.
Okay, so it's not all about that drill, baby, drill
Yeah.
thing. But then what does a Trump win? What does that actually mean for oil?
Well, that's where things get really unpredictable, I think. And, Trump's always been a bit of a wild card, right? Especially when it comes to sanctions. So just imagine if he wins and decides to really double down on those sanctions against Iran.
Okay, yeah.
And by extension, China,
Oh, wow.
that could really restrict the global oil supply. And if that happens, well, we could see prices go way up.
So a Trump win, it could actually push oil prices up.
Yeah.
That's not what you usually hear.
No, it's definitely counterintuitive. But there is another possibility. He could go the other way. He could decide to ease sanctions on, say, Russia and Venezuela. And if that happened, well, that would flood the market with oil, could drive prices down.
So it's a real back and forth then. It's like, who knows what'll happen?
It really is. But you have to remember, the market itself, it reacts to way more than just the U.S. president.
No.
You got OPEC plus decisions, what's happened with the Chinese economy, global events, all these things. And they all play a much bigger role, I think, than who's in the White House.
Okay, so trying to predict oil prices after the election, that's a fool's game. Got it. All right, let's shift gears a little bit. Let's talk about the U.S. dollar.
Okay.
This report, it suggests that a Trump win could actually boost the dollar. Why would that be?
It's interesting. In a lot of ways, what they're calling the Trump trade is already happening. The dollar is getting stronger, and expectations of, the Fed cutting rates, those are fading. And the reason for this, well, a lot of people think that Trump's policies would be, a bit more fiscally expansive
Yeah.
than Harris's. And that could lead to higher inflation.
Higher inflation means?
It means the Fed might have to keep interest rates higher for longer. And if that happens, well, the U.S. dollar starts looking pretty attractive to investors, especially those looking for better returns.
Okay, yeah.
It's like a magnet pulling in that global capital.
So Trump wins. That could be a recipe for a strong dollar. But are there other things that could contribute to that?
Oh, for sure. I mean, there's his pro-business policies, the possibility of tax cuts. Those could really jumpstart the U.S. economy, and that would make the dollar even stronger. And then there's always the unpredictable element, his protectionist trade policies.
Wait, hold on. How would those make the dollar stronger? I would think that would make U.S. goods more expensive, which would hurt exports, right?
Well, that's the long-term risk, definitely. But in the short term, tariffs can actually increase the demand for U.S. dollars.
Okay, how so?
Think about it. You've got foreign companies. They want to do business in the U.S. But if there are all these tariffs in place, well, they need U.S. dollars to buy those goods, right?
Yeah.
And that increased demand, well, that can push up the value of the currency, at least for a while.
So are we saying then that a Trump win means like a guaranteed dollar rally?
Not necessarily. There's a potential for a short-term boost, but there are also some pretty serious headwinds facing the U.S. dollar.
Uh-oh, I love a good plot twist.
Yeah.
Tell me about these headwinds.
Okay, so one of the biggest concerns is the growing U.S. deficit and the rising government debt.
Okay.
And these factors, they could really weaken the dollar in the long run because, investors, they start to worry about whether the U.S. can actually sustain all this debt.
Right.
And that makes them nervous. They might be less willing to hold on to U.S. assets.
So even if Trump's policies give the dollar a boost at first, these longer-term risks, those could eventually drag it back down.
Exactly. It's like, building a house on a shaky foundation.
That's a great analogy.
And there's another layer to this. Trump's protectionist measures, those tariffs we were talking about,
Uh-huh.
they might help the dollar in the short term, but they could actually end up hurting U.S. exports in the long run.
Right, right. Less competitive.
Exactly. And if that happens, global demand for the dollar could go down.
So it's like a tug of war,
Yeah.
right? Short-term gains, maybe, but possibly long-term pain. What else should we be worried about?
Well, the last piece of the puzzle, I think, is volatility. If a Trump administration leads to more ups and downs in the business world or in international relations, well, that could make U.S. assets seem riskier. And if that happens, investors might start looking for safer places to put their money.
And that would mean,
That would mean a weaker U.S. dollar.
so a Trump win, it's a gamble for the dollar then.
I think that's a fair assessment. There's potential for some quick wins, but there's also a real risk of long-term weakness. But, let's go back to something you mentioned earlier about a Trump win potentially boosting the dollar against the euro.
Okay, yeah.
The report specifically talks about that possibility. So what's going on there?
Yeah, break that down for us.
Well, one factor to consider is energy independence. Remember, Trump's all about drill, baby, drill. So if he gets a second term, he might really focus on producing more oil here in the U.S.
Okay.
And that could lead to lower energy costs here compared to Europe.
Right, because they import a lot of their energy.
Exactly.
Yeah.
And that difference in energy costs, well, that could make the U.S. a more attractive place to do business, could attract more investors. And all of that would drive up demand for the dollar, potentially weakening the euro. Because a stronger dollar means you can buy more euros. Your investment goes further.
Okay, so cheaper energy here, that makes the U.S. look better, and that makes the dollar look better.
Yeah, it's a real advantage.
Got it. But we can't forget about those long-term risks we talked about earlier. Right?
Yeah, you're absolutely right. Those structural headwinds, they're still there. And this report really highlights one in particular, that growing U.S. deficit and the rising government debt.
Right, yeah.
And, both Trump and Harris, they seem to be in favor of spending more,
Wow.
which, inevitably means a larger deficit, more debt.
Okay, so that's a problem no matter who wins. But how does that specifically affect the dollar?
Well, think about it this way. When a government keeps adding to its debt, it's basically sending a signal to investors, right? And that signal, it says, hey, maybe our finances aren't so sustainable in the long run.
Right.
And that can make them hesitant to hold on to that country's currency. Could even lead to a drop in its value.
So it's a warning sign, like proceed with caution.
Yeah, exactly.
Mm-hmm.
Investors want to see responsible fiscal management, mounting debt. That's a red flag.
For sure. And then you add in the possibility of inflation.
Right. Policies that really boost the economy in the short term, they can also lead to inflation down the road.
Right. So we could see a situation where, okay, Trump wins, the economy grows, the dollar gets stronger, but then over time, all that gets eroded by rising debt and inflation.
It's a delicate balance. And then there's another potential risk, especially with a possible Trump victory, those protectionist trade measures.
Wait, I thought we talked about how tariffs could actually strengthen the dollar, at least in the short term, by increasing demand here in the U.S.
You're right, that's true. But in the long run, those same policies, they could backfire. If U.S. goods get too expensive because of tariffs, other countries might just buy their stuff somewhere else.
Yeah, makes sense.
And if that happens, demand for the dollar goes down and the currency takes a hit.
So again, it's a short-term gain, but it could mean long-term pain. It seems like every potential upside we've talked about comes with a potential downside.
That's just how it works with these complex economic systems. There's always a trade-off.
Yeah.
And the future of the U.S. dollar, it's really tied to the choices we make in this election. This report, it argues that we're already seeing a shift away from global trade and finance.
Right, like a less globalized world.
Yeah, exactly. And this trend, it could actually weaken the U.S. dollar no matter who wins.
But a Trump victory, wouldn't that kind of accelerate that move toward less globalization? His whole America First thing seems to fit that.
That's what the report suggests, yeah. Trump's not really a fan of international institutions, and he's very focused on what's happening here in the U.S. So yeah, that could definitely fuel this retreat from globalization, and that could have some pretty big consequences for the dollar.
Wow, this is a lot to take in. So we've got these short-term gains and long-term risks, all mixed up with the uncertainty of the election. What should our listeners be thinking about right now?
I think the most important thing is to stay informed. Really understand what each candidate's policies could mean. The decisions we make in the next few weeks, they're going to shape the economy for years to come.
It's not just about choosing a president then. It's about choosing an economic future.
That's a good way to put it.
So oil, the dollar, and how a Trump win could affect both. A lot to think about. But there's one more piece of this puzzle I think we should talk about, this idea of deglobalization, what that could mean for the future of the U.S. dollar.
Yeah, this is where it gets really interesting and maybe a little bit scary. The report, it argues that deglobalization, basically this shift away from global trade, global finance, countries kind of doing their own thing more, it could weaken the dollar, no matter who wins.
So we touched on that a little bit earlier, but can you unpack that a bit more? Like why is deglobalization seen as such a threat to the dollar?
Well, for a long time now, the U.S. dollar, it's been king, right? The world's reserve currency,
Right.
meaning it's what central banks all over the world hold the most, what they use for international transactions.
Makes sense.
And that gives the U.S. a big advantage. We can borrow money more cheaply. Our companies have an easier time doing business all over the world.
Right. It's like having that VIP pass to the global economy. Right.
Exactly.
But how does this deglobalization thing, how does that mess that up?
It kind of throws a wrench in the whole system. If countries are more focused on, making things themselves and trading with their neighbors, well, they don't need one big dominant currency as much.
Oh, I see.
Right? We could see a world where regional currencies become more important, or maybe even digital currencies, and that would mean less demand for U.S. dollars, which could make it, lose value.
So this isn't just about Trump's policies then, it's about a bigger change happening in the whole global economy.
Sure.
Exactly. Trump's America First stuff, it might speed things up, but this trend is already happening. Look at all the regional trade deals popping up, the tension between the U.S. and China. More and more countries want to be, self-sufficient.
Right.
All of that points to a world that's moving away from that hyperglobalization we got used to.
So what does all this mean for the average person? Why should they care about deglobalization and how it affects the dollar?
It's not just some abstract idea, This has real consequences. A weaker dollar means you can't buy as much stuff. Imports get more expensive. Travel costs go up. Inflation can eat away at your savings.
Right.
It can also make it harder for U.S. companies to do business overseas, which could mean, job losses, slower economic growth.
So a weaker dollar, it's bad for pretty much everyone.
It's definitely something to keep an eye on. The dollar's not always going to be on top, It has to earn that spot. And the decisions we make in the next few years, those are going to determine if the dollar stays strong or if it starts to decline.
Wow. This has been a lot. We've learned that this election could really change things for oil, for the dollar, even for how the global economy works.
It really shows how connected everything is.
Yeah, it does. And that even things that seem far away, they can have a big impact on our lives.
That's for sure.
So we've talked about oil, we've talked about the dollar, and we've talked about how a potential Trump win could shake things up for both. It's a lot. But there's this one more thing we need to dig into, and that's deglobalization and what it could mean for the future of the U.S. dollar.
Yeah. This is where things get really interesting, I think, and potentially a bit unsettling. This report, it argues that deglobalization, this shift away from interconnected, global trade, global finance, it could weaken the U.S. dollar, regardless of who wins.
We talked about that a little bit earlier, but let's break it down a little more. Why is deglobalization seen as such a threat to the dollar's dominance?
Well, think about it. For decades, the U.S. dollar has been, the king, the world's reserve currency.
Right.
Meaning it's the currency that central banks around the world, they hold the most of it. They use it for international transactions.
Right.
And this gives the U.S. a huge advantage. We can borrow money more cheaply. Our companies can do business globally much easier.
Right. It's like having, like we said, a VIP pass to the whole global economy.
Exactly.
But how does this deglobalization thing, how does that threaten that?
Well, deglobalization, it kind of messes with that whole system because as countries become more focused on, producing their own goods and trading with countries nearby, they don't need one big, dominant currency as much.
Oh, I see.
Right. We could see a future where where regional currencies become more important, or maybe even, digital currencies. And that would mean less demand for US dollars, which could, potentially erode its value.
So it's not just about Trump's policies then. It's about a much bigger change happening in the global economy overall.
Exactly. Trump's America First policies, they might speed things up a bit, but this trend, it's already in motion. We see the rise of these regional trade blocs, growing tension between the US and China. More and more countries, they want to be more self-sufficient, economically.
Right, yeah.
All of that points to a world that's moving away from the kind of the hyperglobalization we've seen in recent decades.
Okay, so what does all this mean for the average person? Like why should they care about deglobalization and how it affects the dollar?
Well, it's not just about, abstract economic theories. This stuff has real implications. A weaker dollar, it means reduced purchasing power for U.S. consumers. Imported goods become more expensive, travel costs go up, and inflation, it can erode the value of your savings.
Right.
And it can also make it harder for U.S. companies to do business abroad, which could lead to, job losses and slower economic growth.
So a weaker dollar, it's bad news for pretty much everyone, consumers, businesses.
It's definitely something we should all be paying attention to. The dollar's dominance, it's not a given. It's something that has to be earned and maintained. And the choices we make, in the next few years, they're going to determine whether the dollar keeps that top spot or if it starts to decline.
This has been wow, this has been a really eye-opening deep dive. I think we've learned a lot about how this upcoming election it could really change things for the oil market, for the US dollar,
Yeah.
even for the entire global economy. It's a reminder that things are always changing and we need to stay informed and be ready to adapt to those changes.
Yeah, absolutely. It's all about understanding how everything's connected, how even things that seem, far away can have a real impact on our lives.
Well said. And on that note, I think we're going to wrap up this deep dive into the potential impact of the US election. Thanks for joining us, everyone. Remember, stay curious, stay engaged, and keep asking those tough questions.